Hello and welcome to this training video of the EXP group. This video is related to the ACCA F8 Audit and Assurance paper. Please note that these videos are based on the express notes that are available on our website www.theexpgroup.com. They are free of charge. You can download them and follow the videos using these notes. Our first video is going to be related to audit reports. Audit reports basically are issued usually at the end of the auditor's work after all the fieldwork has been completed, and maybe it is important to give consideration to it at the beginning of our videos to know where to focus our attention. Exam questions during the F8 exam usually contain or frequently contain audit reports or something related to audit reports in them. So it's good to give, let's say, high priority during your studies to these videos. The questions might be purely knowledge-based, or maybe more of a more practical issue. For example, to recommend an appropriate form of the audit report based on a given scenario, or identify and explain in what respects an audit report is not satisfactory. Now, having these in mind, let's see what is the first, say, important aspect of the syllabus. The auditor's report, whether issued, has usually two main issues, or considers two main issues: that the financial statements give a true and fair view of the company's financial position and performance, and that these have been properly prepared in accordance with the relevant professional recommendations and or statutory provisions, i.e. in accordance with the relevant standard. Based on this, we shall know that ISA 700, that the auditor's reports and financial statements, clearly states what are the elements of the auditor's report. Please have them into consideration, take them into consideration, and try to memorize them. And also you shall be able to explain these elements of the auditor's report. You might know that the auditor's report might be unmodified or modified. A modified audit report might come up in, might result in a qualified opinion or not. It is important to remember that a modification will be required only if there is a material issue come up. With the practical type of question, so when you have a question in the exam that's practical, not just a theoretical, always assess based on the information available whether the issue you are discussing is material or not in terms of figures. Don't just state to the examiner that you would consider materiality when discussing that particular topic. Please say that topic or that amount is material to the financial statements or not. And you have here a nice short example. If the company has not made a provision of 150,000 in terms of the profit before tax amounting to 1 million is or not material, you know that in theory anything up to 5 to 10% from the profit before tax and above that obviously might be considered material. So in this situation, this amount is material. So you should also know something that's the definition of the materiality. What is material to the users of the financial statements? Anything that would be, let's say, ignored from the statement of financial position or misstated and would influence the users in taking or making a decision, that is material. Yeah, so this is what you should also learn while preparing for your exam. Modified audit reports with an unqualified opinion. These might come up with an emphasis of matter paragraph. This is something usually related to matters that are adequately disclosed in the financial statement, so it will not attract a qualification of the opinion, but the auditor wants to draw attention of the users of the financial statements to some particular topics. This should be included as a separate heading after the opinion paragraph, and it should make clear that the audit opinion is not qualified based on this. Examiner is usually complaining that people cannot identify clearly where to use such a paragraph. For example, where the going concern is adequate at the moment for preparing the statement of financial position and the other components of the financial statements, but there's a significant uncertainty which is fully and adequately disclosed in the notes to the financial statements that might impair this going concern. Or where, for example, director's report isn't consistent with the financial statements. Then this is also something that would require an emphasis of matter paragraph. The director's report is not the objective of the auditor's report. It's not objective, it's not subject to the audit, so we cannot express an opinion based on this. When it's a qualification, it's a qualified opinion, then it's obviously because of a limitation of scope, so the auditor did not have access to a particular area of information that was audited, or because there's a disagreement between the auditor and the client management. So based on these two types of sources of qualification, the disagreement might be material but not pervasive when only some elements or one element of the financial statements is impacted. In such situations, the auditor's report would be an except for opinion. So except for a particular area, the financial statements give a true and fair view. Or it can be material and pervasive, which means that disagreement is affecting the view on the financial statements as a whole. So if such situation is caused by the limitation of a scope, then the auditor is issuing a disclaimer of opinion, while if it's because of a disagreement, then the auditor is issuing an adverse opinion on the financial statements. Usually, a qualified opinion, according to the standard, must be described in a paragraph before the opinion paragraph, and the auditor should also quantify the qualification circumstances. So make it clear what is the impact on the financial statements. For example, if not stating the inventory at the lower of cost or net realizable value, it has an impact on the profit on the balance of the inventory of a certain amount. That means quantification, must quantify the impact on the financial statements. There's also a summary for you in terms of audit reports. If you have any material modification, if no, then you have a standard report issued according to ACCA 700, nothing's modified. If there is something that requires modification, if there is no impact on the audit opinion, you will issue an emphasis of matter paragraph, while as if there is an impact on the audit opinion, we have to see whether the qualification, because it means that in this situation it is a qualified opinion for sure. But let's see whether this is pervasive. If it is not pervasive, we just have an except for opinion, while as if it is pervasive, then we have to see why did we incur this situation. If it's because we have a limitation of scope, then we will have an adverse opinion. If it's because disagreement, then it will be a disclaimer of opinion. Now that you know what is the objective of the auditor, in our next videos we'll deal with different parts of the audit engagement, starting with ethics in the second video. See you soon there.